Hey guys, so welcome back to the channel. Today I have a new trading strategy which I'm going to backtest for you over 100 trades. I'll first tell you about the indicators we're going to be using, show you a few examples, and then perform the 100 trade backtest. This strategy involves two trading indicators, the MACD and the stochastic indicator. So guys, if you want to support this channel and receive exclusive access to all the strategies that we've backtested so far, please check out our Patreon's page. We will also have a Discord live chat which you can use to ask any questions to the community. The first 30 people joining the middle tier will automatically have full access to the top tier at no extra cost, allowing you to send a strategy for me to backtest. I will then create a video similar to the one you're watching and present everyone with the results. So please consider having a look at the first link in the description, and I hope to see many of you on the Discord community. So the first indicator is the moving average convergence divergence, also known as MACD or MACD, and it's a trend following momentum indicator that shows the relationship between two exponential moving averages of a security's price. So the MACD is calculated by subtracting the 26-period exponential moving average from the 12-period exponential moving average. Then the second trading indicator is the stochastic oscillator, which is a momentum indicator comparing a particular closing price of a security to a range of its prices over a certain period of time. The sensitivity of the oscillator to market movements is reducible by adjusting that time period or by taking a moving average of the results. It is used to generate overbought and oversold trading signals, utilizing a 0 to 100 bounded range of values. So this backtest is based on the 1 hour time frame on USD JPY. So here's the strategy. We go long when the MACD line turns positive and the stochastic is in overbought condition. And similarly, we go short when the MACD line turns negative and the stochastic is in oversold position. The second rule is that we place a stop loss at the last swing. We don't have a maximum number of trades that we can have open at any given time, and we'll be using a variable risk to reward ratio with a trailing stop loss. So that means that whenever the open profit reaches 1R, we move the stop loss by 1R. So let's get on the charts now so I can show you a few trades and then we'll dive straight into the 100 trade backtest. All right guys, so here we are on the charts, USD JPY on the 1 hour time frame. We'll go ahead and add the indicators. So you're going to want to go MACD and the stochastic. So it's this one by default. So we'll go ahead and change the settings of the MACD. So the MACD settings are slightly different. For the fast length, we're going to use 24, the slow length 26, and the signal smoothing we're going to keep it at 9. The style, you know, feel free to change the colors or anything, but what we are interested in is the MACD line. You can keep the signal line if you want, but for the sake of this backtest, we're going to remove the signal line. So we're going to click OK, and for the stochastic, we are going to change the inputs to 21 for the percentage K length, 3 for the percentage K smoothing, and then leave 3 as the percentage D smoothing. So as you can see, it just smooths out the indicator. We can remove the background. Well, that's just personal preference, and then click OK. So there you are. So the strategy is that whenever the MACD turns positive and the stochastic is in overbought position, so above the 80 level, then we go long. You would go long right here. In this case, for example, the MACD turns positive, but the stochastic is not in overbought position, so you don't go long. However, you go long when both conditions are met. So in this case, the MACD is positive and the stochastic reaches above the 80 to 100 range. So let me show you a few examples and then we'll do the backtest. So there you go, a couple of trades. The MACD turns positive right here. The stochastic is above 80. We go long. We place the stop loss at the last swing. The maximum open profit reached 4.43. So you would have moved your stop loss as far as 3. So that would have been a 1 to 3 risk to reward ratio. Then the MACD turns negative right here. The stochastic is below the 20 line. So we go short. We place the stop loss at the last swing, and In this case, this is a loss. Here, again, the MACD turns negative. The stochastic indicator is in oversold position. So we go short. The maximum open profit reached 1.13. So that means that you would have moved your stop loss to break even. So that would have been a break even trade. And here again, the MACD turns positive. The stochastic indicator is in overbought position, so we go long. Here we place the stop loss at the last swing, and the maximum open profit reached just below 1 to 3 risk to reward ratio. So it didn't reach 3, so you would have moved your stop loss as far as 1.1, and this would have been a 1.1 successful trade. And then here you go long. You could actually have gone short right here with the stop loss there. And then here you go long, but that's a loss. So let's perform the back test now to see how this strategy performs over the long run. And I'll see you back for the results. guys, so here are the backtesting results. On USD JPY, we had a maximum drawdown of 28% while risking 5% per trade. We had a variable risk to reward ratio with 27 wins, 41 losses, and 32 break-even trades, with a maximum of 1 win in a row and 2 losses in a row. So that gave a win rate of 39% over 162 days, so roughly 5 months, with a net profit of 21.8%. So if you would have started with $10,000, you would have ended up with a bit more than $12,000. So this is a great long-term strategy. More than 20% over 5 months is a great performance. I am certain that this strategy can work on lower time frames, so you might have higher returns but a higher drawdown. So let me know what you guys think. You know, if you have any ideas of anything to add to this strategy to provide a more consistent performance, let me know in the comments, and I'll see you in the next video.